Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. We are the short-term traders with the long-term plan. Hey, we're going to talk about trades for tomorrow, 3/15/07 Thursday. Let's do a quick backup for today. I got a question for you before I even talk about today. I mentioned bulls and bears make money, and you know what happens to pigs. I also said this S&P has a tendency tomorrow at a target at 1370 on the downside, but if I see that 1377 target, I'm running for the hills because I'm not a pig, I'm a bear, and I'm going to take my profit. I would like an honest reply from some of you traders who were piggish yesterday, or today I should say, which was Wednesday, on the drop. We sold what was practically the high of the day early. It dropped to 1377.5. I flash updated at 1380 and said, let's run for the hills. I got out. A lot of smart guys got out. I'm guaranteeing that there's a lot of you guys that got piggish and didn't get out. If that is the case, write to me because I will help you with that. So write to me at futuresanalyst@gmail.com. Tell me if you got out this morning when we got out at the lows. Okay. We also caught euro currency very nicely, and I like it again for today. S&P, we need to talk about this. S&P looks like it's going to rally first, and then I'm going to sell into it, and I expect volatility on both ends of this market. In fact, volatility alert. I expect run-ups, turnaround, subsequent run-downs. I expect stops to get hit on both sides for lots of people all over the place. I'm not talking my stops. When I put them in places, I don't expect them to get hit. I'm talking about a lot of other traders out there. Stops are going to be ran on the upside and downside. I see huge volatility starting to brew with the S&P. With that in mind, let's go to work and make some money tomorrow. SPM 7, ESM 7, the S&P Mini, SM 7. Omni resistance 1408 to 1410. We rally up there somewhere. I'm going to hit them on a rally. Remember, place all your orders on an MIT basis. MIT, if you're going to enter in at 1408, 1409, 1410, 1412, whatever your number is, MIT on your entrance. Omni turns neutral if we get above 1416.75. You get short in here, it starts to rally. You get above the 16 level. Oscar's wrong for the day, I'll tell you that much, because I'm running for the hills. Profit objective is 1387 to 1385 on the downside. If we run up first and our shorts work out and our stops don't get hit, I think they're going to try to tank it again. That's what my work tells me. Always be out by the close on the S&P day trades. Euro currency, we got a green Omni, red Omni S&P, green Omni Euro currency, like we had today, or I should say yesterday. You know I'm always out. I'm always in tomorrow's videos. So yesterday, meaning today, we had a red. It worked. We got another one. Greeny in the Euro currency, ECM 7. ECM 7. Omni support 132.53 to 132.49. We are currently trading around the 132.70 level. On a pullback, you get long there. Again, place your orders as an MIT. Omni turns neutral if we drop below 132.24. So that's your stops obviously going lower than 132.24 on that trade. Omni's profit objective is 133.39 on the upside. So if you're buying them around 132 half area, you're going to get out around 133.39. Expect some resistance at 133.17 to 133.20. Again, be out by the close. Corn. Hey, let me revert to the scales for a moment. In corn, if you had your scales in to buy May corn, you should now be long your third corn at 404. Stops go below 390. Remember, this is a long-term trade, a long-term idea. If it trades the print of 390, you don't go running for the hills. Gets under 390, it stays there a day or so and doesn't pop out of the hole. We make the trader's decision at that point. Okay, with that in mind, ZCK 7, corn for tomorrow. Omni support 402 to 401. Currently, we are trading around 407. Omni turns neutral if we get below 395 on this day trade in the corn. So you're buying 402, 401. You get out if you get under 395. Omni profit objective, 414 to 416. Looking for a nice little pop here. Take a look at the chart I left you on the website. You'll see there's a couple of nice things that make corn look like it wants to pop. Will it? Hey, who knows, right? If I knew that for sure, I'd be talking to you from, I don't know, my moon unit vehicle or something. Who knows? No one ever knows for sure where it's going, right? How could I? How could you? But I'll give you my best educated guess every day. Okay, silver. May silver, I didn't give a trade, but keep your eye on that bad boy. The gold doesn't look as nice as the silver. The silver is showing me signs of a pop coming. I don't know. I like it. I don't have a rec for it, but keep your eyes on it. If you're a metals fan, the silver looks stronger than the gold right here. Okay. A couple of quick things I wanted to go over. I'm doing a trade show called The Money Show in Las Vegas at the Mandalay Bay. That will be May 14th to May 17th. I will be there. I invite you guys to come down. Come shake my hand. If enough of you show up, we'll do a seminar while we're there. It's going to be exciting. We got a nice booth. We have some exciting things to do. And I'd love to get to meet my traders who are following with me and following along with the Short-Term Trading Live with Oscar. So make reservations. Come on down. It's a free show. May 14th to May 17th, Mandalay Bay at Las Vegas. Okay. I have been reading a lot of things about mortgage rates, as we all have, and I must say, I got something I want to read to you. I can say back in the 80s, 1980, 81, 2, 3, the banking system came up with this ingenious idea. Let's go with adjustable mortgages. And adjustable mortgages would let a mortgage holder get into a house, a new purchase, a new home, didn't matter, they would even do it on second mortgages, third. You can get into a house at an interest rate, let's say real interest rate is 10%, they'll let you in at 5%, and then you have a fluctuating mortgage after a year or two. So you had a lot of people who couldn't afford a 10% rate or a house at 10%. They would buy it at a 5 or 4 or even 3% rate, knowing that their rate will climb eventually. Maybe it's a 1-year loan before it balloons, maybe 2, maybe 5, maybe 10. All loans were structured differently. But the key behind it was to get you into a house with a smaller payment than was actually necessary to pay for your amortization. Well, that didn't work because, lo and behold, we started to hit the mid-80s. By 1987, April 27th, 1987, boom, we had our crash. The market broke. The mortgage companies went down the tubes, and we had to start building again from there. There are some things happening now that are very similar, and hence we're getting volatility in the S&P. We've already started this little descent that you've seen us on. A little something I wanted to read. From Barron's, this came out just at the end of last year, the beginning of this year, right there. From Barron's, 32.6% of all new mortgages and home equity loans in 2005 were interest-only loans. That's up from 0.6% 4 years earlier. Barron's says 32.6% of all new mortgages in 2005 were given out at an interest-only loan. That's even worse than getting the loan back in the 80s with the adjustable, because now you're only paying interest on that property. And the property's dropping in value. You're paying just interest payments only, so you're not knocking down your amortization scale at all, especially on your principal. And what's going to happen when the price of your house starts to erode with the price of the rest of the houses in this country? You're not going to be able to afford your payments. Your rents will come down. People won't be able to afford what they were giving you so you can pay your mortgage on your second property or however you've structured your mortgages. And boy, it's going to happen again. There's no way to stop it if they continue at this pace. More news. On Tuesday, this Tuesday, the Mortgage Bankers Association said lenders began foreclosures against more than 1 in every 200 homes across the country. That's a record. 1 in every 200 homes is already beginning to go into foreclosure. What I just told you about is definitely going to come back and bite us. Will it be this year, the middle, the end, next year? I can't say that. I can say they are beginning to build in a bearish tendency in our markets here. Let's keep our eyes on that. That is a long-term view, of course, but I remember picking up on this in the early 80s and waiting for it to happen. It did. We expected it. We made some good moves to make sure that we capitalized a little bit on it, and now it's starting to happen again. So be careful out there. At some point, they're going to punch a hole in this, and it'll be blamed on probably the housing or the numbers from housings being sold or foreclosures from banks. It'll have something to do with banking and mortgages. It's going to take us down at some point. I'm starting to keep my eyes open for that. Okay, let's see. Is there anything else? I did cover the grains, right? We talked about silver being bullish. I talked about the Mandalay Bay. I can't wait for that, Mike. I can't wait. You're coming with me, right?
I'm coming.
You're coming. We're both going to be in there. We're even getting Bob involved. We're going to do live shows right from the floor of the Vegas Exchange while we're there. It's going to be fantastic. I can't wait. I did want to read one letter. You know, I talk about every time, stops are your best friends. Always place your stops. Put your stops in first. And people are beginning to listen. I've given lessons. I've said things in my lessons. I'm creating what I like to think of as a small universe of very smart ideas that I have and I've presented to you about trading and methodologies. And hey, 24 years of doing this, day after day, in the pit, out of the pit, doing the analysis. As you've seen in some of the work I've presented to you in some of my videos, I got something going on here. I know what I'm talking about in a lot of markets. So stay with me, okay? Especially with your stop placement. With that in mind, I had to read this letter to you. It is fantastic. Hi, Oscar. Very nice of you to read my email regarding stop running. Sue, another shout out to you. Sue, you are right in target with what I'm trying to teach people. Listen to this letter, guys. I will never again fear placing stops. Hey, she's learning, right? She's learning. As you know, I'm not trading live as of yet. I've been trading on a demo, so I'm looking forward to trying out the simulator on your website. I want to get into a habit of trading on a demo as I would live, with the goal in mind to protect my capital with proper money risk management, etc., etc., etc. I love this girl's letter. She knows what she's talking about. Okay. And I'd like to follow your trades and advice, but not placing trades until I've done my own analysis to see if it tallies with yours. Mike, how many times have you, traders out there, how many times have you heard me say, use me for nothing more than a tool around your work? She's so on, it's incredible. You're doing great, Sue. All right. I'll learn to trade on my own, just in case you ever get abducted by aliens. You know, and of course, it's a bit facetious, but I could not be here tomorrow. Someone like Sue is already learning how to do this without me. That's my idea behind this. You can do this without me. Can you come up with the exact omni buys and sells? Well, that's going to take some time. Can you get into the right mentality for trading? Get your stops in, get them in first, trade correctly, keep your emotions out of your trading? Yes, you will certainly learn that if you hang with me long enough. Okay, right next to my laptop, I now have a picture in a frame. The trading disciplines you have mentioned over a few videos ago. 1, the trend is your friend. Absolutely, Sue, you know that. Keep your analysis simple. KISS. Keep your analysis simple. Very good, Sue. Always place your stops first. This girl is great, Mike. I swear to God, this is fantastic. Next, discipline, discipline, discipline. Never chase the market. Always use trailing stops. It's never too soon to take a profit. I look at it and read them to myself every day. And she goes on to say, I don't care what you're drinking, you're a great guy. Well, Sue, you are a fantastic student. Unbelievable. This is exactly why I'm doing this, to get letters back like this, to see that I'm really helping you guys out there. It's part of my makeup. I have to help. I don't know why. I don't know if it's character flaw or not. I always feel I have to help. I always have crowds around me, animals, friends, people. I always help everybody. I love it. And I will continue to help you bridge the gap from the days of the floor to the days that we're evolving into now, where you type your orders in electronically and you got to know how to do this stuff yourself. With that in mind, if you're at my YouTube site, www.youtube.com/futuresanalysts, hit the subscribe button, subscribe to my videos. If you hit the subscribe button, you will get videos sent to you immediately, or at least an email from YouTube as soon as I'm done putting out a video. By the way, a couple of questions about when I put my videos out. If you've already received my email, and I'm doing this video at the moment, the second I'm done, I shoot it out to YouTube. We're at the mercy of YouTube when we can all see it in public. But it goes right out, so, you know, keep looking until you get it. Okay, If you want to see flash updates, if you'd like to get them emailed to you, and let me tell you something, there was one chance to get out of these shorts that we were in S&P today, and that's when I emailed you on a flash update. If you didn't get out then, all the way back up to new highs and all that. New highs! Talk about not being a pig. Don't be pigs out there. Take your profits. All right. You can email me, Gmail, www. Oh, no. Again, I've done it again. That's 3 videos in a row. And it is futuresanalyst@gmail.com. If you give me your email address at that address, I'll put you on my Flash Updates database. Flash Updates are essential for successful short-term trading. As I mentioned, if you didn't get my Flash Update at that low, I don't know if you would have made a decision to get out yourself. I was quite embarrassed. The world was, but that was the spot to get out. Okay? I think I've covered just about everything. If you need to call me, please do. 718-351-2266. Traders, good luck. Watch it out there. Volatility alert. Keep your stops in. Keep your emotions out. Good luck, traders. I'll be speaking to you, I guess, tomorrow night with another video. Mike, you got something you wanted me to add to that?
What about the website?
Did I not mention my website? All this work I've done on my website, I didn't mention it to you. www.futurestraders.com. Go to the site. There are charts there. There's the Omni page that gives you these recommendations and flash updates come right up right there. The forum is there for us to keep in touch with one another, and many more exciting things will be there shortly. We are working feverishly in the background for you guys. Good luck, traders. I'll see you tomorrow night. Knock them clean and be careful out there.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.